inflation figures will be published at 7 o'clock this morning. So obviously we talk about the cost of living crisis still at the front of many of your minds. We'll be right across those and back with those very shortly.
Actually, we're going to be speaking to business commentator Laurie Laird about all
that's
this.
Immediate.
Yeah,
that's good.
Right, give them the little hint there. About the inflation results impending. What can we expect from that this morning?
Good morning to the pair of you. And I know that we have been talking so much about inflation. It's been the big economic story over the past couple of months. I'm going to go out on a limb here and say that I think inflation probably won't rise as high as a lot of city analysts think. People are looking for a rise in inflation to an annual rate of 5.5%. Look, that is hefty. If it were to rise that high, it would be a 30-year high. But paradoxically, there's going to be something that holds inflation back. And weirdly, that's petrol. Now, I know that doesn't sit very comfortably with the fact that we've seen petrol at a record high over the past couple of days. But when you think about inflation, and this is really important, when you think about inflation, it's an acceleration of prices. So if you have prices that are very high, but not getting any higher, not accelerating, inflation will come down. Now, if you look at petrol prices we're looking at January numbers today. That's what we're expecting in a couple of minutes. Petrol fell a little bit between December and January. In the same period of 2020, petrol prices rose by 3%. And what that implies statistically, when you do the maths, is that that will be a negative for inflation. So it sounds paradoxical. Petrol prices are up more than 20% over a year ago. But because they fell between December and January, that will be a negative for the inflation rate. So I suspect that will keep inflation from kind of running out of control. I think the bigger question, though, is even if inflation begins to ease later in the year, as the Bank of England thinks it will, does that mean that absolute prices are still crippling at a family?
Yeah, and it's frightening, isn't it? This is ahead of even talking about what might happen come April with the national insurance hike and, of course, all the concerns around energy security and rising gas prices. It does really look like a tough year ahead.
Absolutely. And I think I'm going to go out on another limb here. I suspect that national insurance contribution, I expect those tax prices will have to be reversed, delayed in some form. And I know Boris Johnson and I know Rishi Sunak have said, nope, this is written in stone. We're not going to change here. But given the, let's say, problems with popularity that this government is having at the moment, the cost of living crisis, the rise in energy prices, I suspect that will quietly be delayed. I think politically that would be a very tricky thing to do right now.
Also a tricky thing to do, Laurie, to ask for a pay increase, to get a pay increase that is not lagging behind inflation. Can you reason to people who may be watching and say, look, I need extra money to keep up with all of this? Is that their employer's responsibility, or what's your view on that?
It's an excellent question, and I'm glad you brought this up, because once we adjust for inflation, at least from numbers we saw yesterday, at the end of last year, people took a pay cut once you adjust for inflation. So whatever you earned in December last year, you actually had less buying power, but to the tune of almost 1%, because inflation has cut into your real your earnings. It means that everybody has taken a pay cut. Things are getting that much more expensive. What do you do about that? Well, the governor of the Bank of England, Andrew Bailey, earlier this month, has kind of told people to lay off asking for pay rises, that they have to do their part to prevent inflation from getting out of control. His thinking is, well, gosh, if people ask for pay rises, then those higher wages will filter into production costs. That will affect inflation through the chain. It's not the really ill-advised comment from Andrew Bailey. It certainly isn't our responsibility as workers to rein in our pay rises. What the government can do here is very, very tricky. There's not much on a fiscal level that the government can do. I think what we will see is more interest rate hikes from the Bank of England. They meet again in the middle of March, and I think it would be surprising were they not to raise interest rates again in March.
Really interesting. You're talking about the Bank of England governor's comments. Andrew Bailey criticised by multiple people, unions, Tesco, the head chair of Tesco, Downing Street, and indeed, in an interview yesterday, the leader of the Labour Party has also come out and criticised those comments, saying people should ask for a pay rise.
Well, absolutely, people have to ask for pay rises. It's not our responsibility as people working in the UK to take one for the team here and say, well, inflation is rising, but I'm not going to ask for a pay rise. I think what the Bank of England will do is surely raise interest rates come March. And the idea behind that is to try and rein in spending. The idea with inflation often is it's too much money chasing too few goods. There is too much demand. The problem is this inflation we're seeing is not induced by excess demand. It's induced by a lack of supply. So the Bank of England, I think, will continue to raise rates. How effective those rate hikes will be is open to question.
Laurie, thanks for answering our questions, and hopefully you've answered a few on behalf of the viewers as well. Appreciate your take there. Laurie Laird is an economics commentator. Thank you.
Good time to study economics, isn't it? Either at university or at school. Really good time to get into economics. Anyway.
That is the sort of really swat, boring, head girl comment that I would expect from you.
I know you disdain anyone that's a head girl.
It's a lovely day. Well, I'm
just saying, this is like a little economics lesson, and I was just thinking, if you're studying it, what we're seeing at the moment is pretty unique in terms of the economy and the pressures on people. It's like a classroom in real life.
In economics.
Set you up in good stead, I think.
Yeah.